You are watching Market Watch, the brief overview of the key events from the world of finance. Yesterday, the minutes of the last Fed meeting, which took place on January 30th and 31st, were published. According to the minutes, most policymakers at the last Federal Reserve meeting were concerned about the risks of cutting interest rates too early. At the same time, only a few of them noted the risk to the economy associated with the long-term retention of the key interest rate at a high level. This is a really important moment for the market, because high concern about premature monetary policy easing indicates a willingness to keep borrowing costs at a high level. But despite investors once again receiving confirmation of the Fed's willingness to keep the key interest rate high, the market reaction remains restrained. For example, the US dollar index could not resume growth. As a result, the euro to US dollar currency pair held above the technical support level of 1.0800. There were also no significant sales in the precious metals market. The restrained market reaction can only be explained by the confidence of investors and traders that the world's largest economy is strong enough to grow at such a high key interest rate. Continuing to talk about the information received from the minutes of the Federal Open Market Committee, it is important to note a moderate increase in the yield of U.S. government bonds. It is for this reason that gold has slightly decreased in price, as well as key stock indexes have returned to the red zone. But there was no panic in the financial markets, allowing buyers to quickly recover a significant part of the losses. This once again signals that the current decline may turn out to be a correction, rather than the beginning of a bearish trend. Bitcoin has also returned below 51,000, but demand remains stable under this level. This is an important point, because despite the moderate stress on the stock market, which found the largest cryptocurrency at another high this year, there were no sales. Therefore, the bullish scenario remains relevant, although the risk of developing a deeper, but short-term correction cannot be excluded. Further sales in the cryptocurrency market may occur in the event of increased concern about economic growth or an unexpected decrease in demand for Bitcoin ETFs. That is, we are talking about unlikely events that make a bearish scenario an alternative. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.